and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for June 19, 2010. Our website is blog.accendotraders.com, where we put together effective video, technical analysis trading plans on a daily basis. So yes, we at Accendo Traders believe in trading plans. That's what every trader needs to be to separate yourself from being a newbie, inconsistent trader and being a consistent, profitable trader. And so what are those core components of a trading plan? Well, every trading system must have a way to determine what market you're going to be in. Futures, forex, options, stocks, whatever your investment vehicle, first you have to determine that. Then you have to determine position sizing. How much you're going to buy, how much you're going to sell. What is going to be your entry? What's going to be your triggers? What's going to be your criteria that tells you to get in and get out of a trade? Stops. Position sizing of stops is all about risk management. It's about saving your account and not blowing out your account. And everybody should have stops. No matter what you're trading, as soon as you put in a trade, you should have a stop. How to get out of a losing position. And of course, exit. How are you going to maximize or capture your winning positions? And finally, your tactics. How are you going to buy and sell? The difference between entry and tactics is that entry is the actual point of getting into the trade. Tactics is about identifying trades to get into. So really tactics come first, and then you get into the trade with the entry. So let's look at the week that passed. All the markets ended up for the week. And the most important thing that we're going to see is that for the year, the market has now turned back from negative to positive. We started off the year positive for the year, and then the month of May happened, and we went down on percentage-wise for the year. And now, thanks to June, we're now back positive. Woohoo for June. The S&P did gain 2.4% this week, but it was a rather slow week of trading, and really what made this week, when you look at 200 for the week for the Dow, you can say all of that happened on Tuesday. Overseas news did continue to play in. Monday started off a little bit shaky when Moody downgraded Greece's debt from the A's down to the B's, basically down to junk bond. The euro, however, after dropping to multi-year lows, has rallied back to about 123 against the dollar. Also, later in the week, Spain's financial stability came into focus, yet overall, that was put aside as their bond offering was successful. There was really no important economic news this week. Sure, there was positive industrial production. Housing was a little bit weak. Inflation continues to be subdued. And, of course, the jobless claims remain parallel. So it's not improving, it's not getting worse, but not improving is still viewed upon as negative. And then, of course, in corporate news, it's all about BP at this point. The oil executives came and testified before Congress this week. The BP exec testified. Basically, his answer to every question was, I don't know. But also, the government was able to arrange a $20 billion escrow fund for those hindered or the cleanup. So, you know, the market is going to view it that way one way or another. We'll stay completely out of the politics of that. Coming into next week, you can see we're starting off slow. We do have FOMC rate on Wednesday that could have some language included in there that could make the market feel better. And then on Friday, we have third quarter GDP estimates. So there is a potential for some more enthusiasm coming into the market that we may speed up a little bit. Of course, remember, selling may go away, so we are in summer trading. So coming up on Monday, we have no economic data to be concerned about. We're done with earnings season until July 12th. July 12th starts the next earnings season with Alcoa. And CLB, you'll see they're on here again. After their one split, they announced another split, so that's why they remain to be executed on February 10th. Just want to go ahead and take a moment to remind you guys that the Accendo Trader 30-Day Challenge will be beginning on July 1st, 2010. Again, beginning of July, we will start our Accendo Traders 30-Day Challenge. And those of you who have participated before know that it's just a month-long series, educational series on getting people up and going and trading. A video will be posted each night. We want to get the feedback, people posting questions and helping each other move along as attempting to become better traders. But this 30-day challenge, compared to the ones in the past, will have a futures slant to it, learning how to get started trading futures. So again, July 1st, our first video will pop out there. Accendo Traders 30-day challenge. Watch the video, post your questions. Let's start our community. And then each Saturday in July, we will have a free webinar where we'll come together as a group and answer any questions as a large group also. So again, Accendo Traders 30-day challenge, July 1st, 2010. As we begin looking at the charts, we're going to look at the S&P 500 on a daily chart at the current time. And last week we kind of talked about the secondary downtrend line that brought us right down to where we were last week, this being Friday. And we talked about there was a consolidation pattern on the daily charts that took us right here at around 11:05 as the high of that consolidation pattern, and down here to 10,040 as the bottom of that channel pattern. And we talked about the importance of breaking the 50 moving average and also breaking this consolidation pattern. Well, we can see a couple things. First, look what happened Monday. When we did this Monday, and also notice that this 1100 pattern also matches up with what's going on in the past. So what we see happening is that the market came up and tested that resistance level and went right back on down on Monday. Now Tuesday, which was the big move of the week and which kept our week positive, we did break up through that area, and then we spent Wednesday, Thursday, and Friday hovering at the 50 moving average. We said last week that let's see a break of the downtrend line, a break of the 20 moving average on the daily chart, and we said we want to run up and see what happens at the 50 moving average. Well, we did that. We broke the 200 moving average, and now we're sitting at the 50 moving average on the daily charts. That's all well and good. Now when we line up our indicators on the daily charts, we can see our stochastics is rolling over, actually giving us a yellow down signal. Again, resistance of the 50 moving average. We see our MACD has already rolled over and heading down, and we can see that RSI has leveled off. So our indicators are starting to show a little bit of an overbought level, and so our support we want to hold is going to be what we broke. We broke 1105. We want to hold that area as we head back up. The other area we'll look at is the 20 moving average holding up as support on the daily chart. Now when I switch this over and come up to the hourly chart, we can see another interesting fact that happened. We spent a lot of time talking about the 50 moving average. We broke that 20 moving average acting as support. But if I were to draw another trend line connecting up what's going on here on our hourly chart, we can see that the end of Friday, and we all know that drawing your trend line is an art versus a science. You can go here. I can even drag it down and maybe even go a little bit further out this way. But what I'm getting at is this. Our hourly chart is getting ready to break to the downside if we break lower, especially if we break this 20 moving average, which is at 1113. Our hourly charts are looking like they're ready to roll over. Okay, for our YouTube folks, our time's about to run out, but we always want to share our partners. First and foremost, we got a great futures trading room that I'm in. Alex is a great leader, and I can't say this enough. His commentary, his advice, his teaching that he does is way more important than his actual calls. Yes, he's 88% success rate, 3 to 6 contracts, about 5 to 6 trades per day. You can see how we've done that whole week. Results are not guaranteed. Trade at your own risk. And you sign up through us, there's a $100 discount right now after a 5-day free trial. But I'm telling you, it's not just about his trading calls, it's about the commentary that he gives that guides you and makes you a better trader. You know how much I believe in financial literacy, being able to make your own decisions, and Alex gets you to that point. We also got a broker, and again, the leverage of futures is what? is the cost basis, and you can't beat $300 e-mini margin and 20 free contracts if you sign up through us. We're a great charting platform. Our turnkey trading system is being updated as we speak. YouTube folks, subscribe to our podcast so that you can get the full version of this video. Check us out on Twitter, the 30-Day Challenge, July 1st, coming up with great educational videos. And of course, if you love our free videos, please consider donating so that we can keep bringing you that great knowledge. Thanks, and I'll see you guys next time. Trade at your own risk, educational purposes only.